Now it's time to bring in my next guest. That's going to be Bill Baruch, president at Blue Line Futures. Welcome back to the show, Bill.
Thanks for having me on again. It's always a pleasure to join you.
All right, Bill, it's great to have you on. Expectations now. We had that little bit of a pullback into the end of December. The Santa Claus rally didn't take place. It was just maybe a reset and giving us, maybe that base to relaunch maybe the bullishness here in the equity market.
Yeah, I would even go one step further and call it a cleansing. Listen, I mean, you take a step back and you look what happened in December. The Fed, they got hawkish, relative to expectations, but were they really that much more hawkish than expectations? And the fact that you had the Fed funds futures really already pricing in what the dot plot gave us, some persistent comments of the cut. It was really maybe not secured. It was more of a discussion in December. Kind of freaked the market out a little bit, but that was healthy. I mean, we had this pullback. So you look at the VIX surging through 20, through 25. You have all this talk about 5% 10-year. You have the fear and greed index, extreme fear. You have the dollar was relentlessly moving higher. It's pulled back since. A lot of these boxes on the scorecard that you need to check in order to get that cleansing, it happened. And I think that's really what's important. And then finally, we tested that gap from the election day, which obviously we gapped higher into that next morning. So a lot of these boxes were checked. The cleansing really happened, shook out maybe some loose hands, if you will, and the market profile really built out very, very well, and we were able to rally to start the year. So I think partly we're seeing this rally, some fresh allocation, but then on top of that, a lot of managers, they really underperformed last year, and they don't want to underperform again. So I think there's really two buckets: those that are going to kind of hold ground to their beliefs, and then there's those that are going to sort of chase some performance this year. So I think you're seeing a lot of flows right now, and for good reason. I mean, you got a lot of news that really helped lift things. NVIDIA in the headlines you were just talking about. I like what we're seeing, but let's not get too excited, too quick. I mean, we really need to close out above those late December highs in order to sort of negate what could be a head and shoulders top in the S&P, really get some more excitement, invite some more buying to come in.
Yeah, and Bill, you mentioned that some of the money flows, we saw a pullback into the end of December, maybe some profit taking going into the end of the year. But all the expectations from some of these money managers and a lot of economists out there, I think the average that they're expecting for the S&P 500 is about 6,600 by the end of the year. Now, we all know from the last 2 years, they're usually wrong on those predictions here. But it seems like it's really lopsided to the bullish side of this market that I've yet to hear anybody say that we're not going to be higher by the end of the year. And that concerns me because a lot of these predictions don't ever come to fruition. Usually it's to the upside above those projections. But it seems like, all the weights shifted to the bullish side of the market. Is that a concern?
Well, listen, you had these 2 years back, 23 and 24, really tremendous years. The best since was 97, 98. Yeah. Back-to-back 20-plus gains. That really typically leads to a strong year to follow. Now, let's be realistic, though, and we haven't had that really good 10% correction. Last year, you look at the futures, they corrected 10%, and it was about a cup of coffee that it was gone.
Right.
I think there's going to be that pullback, and that's where a lot of opportunities are going to lie. But where does that pullback happen from? And again, I think that cleansing really sets the stage. A lot of people were worried about an early year correction, maybe after the inauguration. And, I think it's just really where I'm looking at it is taking it one day at a time. I have a call with a client last night, talking with the team. It's more about just really taking one day at a time. And right now, we had a good move yesterday, but at the same time, it really failed into some of the selling that was in late December. We left a good tail overhead. I wouldn't be surprised to see some more consolidation, into this week. We have non-farm payroll Friday, a lot of data in between ISM today, talking about JOLTS as well. So there's a lot of data, and then we have inflation next week. I think if the bet is laid, for higher prices, we'll get it. And regardless of the inauguration and a buy the rumor, sell the news after that, I think it's more about what's the data going to drive, and what are some of the Fed expectations from there, and where do we see the economy at? So I'm pretty hopeful, but with the idea that we're going to get a sharp correction at some point this year.
Yeah, Bill, you mentioned some of maybe the potential headwinds, and maybe that was causing the headwinds in late December was the fact that we saw yields start to rise. The dollar went to 2-year highs above the 109 level at this point. But it's almost like those two things that might create headwinds, as long as it's not like a parabolic move. The velocity of the move isn't big. Like we did see in the dollar, like we did see in yields. If that starts to calm down and maybe just grinds in one direction, that can still be, supportive of equities at this point, do you think? Or are we expected to see more gains in yields that might create headwinds?
Well, one of our core beliefs this year is we're going to see a dollar come off these recent highs. And it's already starting to happen a bit. It's not uncommon to see tops and bottoms, and really, most specifically, currencies and rates at the end of the year as the calendar turns. So you had a lot of flows, bullish dollar flows coming in the final days of the year, really kind of broke that thing out. Now we're getting a bit of a reversal here. I expect the dollar to be weaker, maybe not a straight line, especially maybe not after a day that was down 1% on the dollar index. Those are big moves in currencies. We got to get through a lot of this data, and I do think the dollar is going to be weaker as the year evolves. Let's also remember that a lot of the tailwinds to the dollar have been due to tariffs, due to weaker currencies against the dollar. But I think the idea, though, is President Trump doesn't want a dollar that's too strong, right. And I think we'll start to see that as he takes the White House, and we start to hear more from him on policy. But additionally, we had a really strong 7-year auction going back about 2 weeks ago. I'm watching that in rates. Do we start to see a little more buying come in on these auctions? These 7-year auctions can be very difficult at times too. Now, given that the 5-year futures have really eroded a lot of those gains since that auction, but keep an eye on what we're seeing here. It's something that there is some upside, obviously, to try and play treasuries with a risk-managed approach.
Yeah, that 3-year auction yesterday, a little bit weaker than expected, disappointing, and that maybe caused that sell-off from session highs here for equities. Also, we got that 10-year yield auction today, 30-year bond auction tomorrow. So those will definitely be one to watch. Bill, give me your take here on crude oil. Is this a bull trap where, hey, maybe some geopolitical risks are perking up, maybe some weather changes are positively affecting crude? Because it seems like every rally over the last year has been sold off relatively quickly, but we're firming up around $74 a barrel.
Yeah, I like to see us hold really at above 71 and a half, then 72 and a quarter area. Now, there's obviously some resistance into previous highs over the last couple of months that we're trading into about 2-3 months ago. I think last time I was on with you in December, talked about we were bullish. We were playing with some risk-defined call spreads. We've sort of rolled that exposure out. Right now, we do own at Blue Creek Capital Management, our CTA, where we're managed futures. We have the March 77.5, 82.5 call spreads. They're not too expensive. They have some good room to move if we start to boogie, through $75, $76. I think overall the landscape fundamentally, we had some news this morning that Russia didn't produce as much as they could from the OPEC, the line in the sand. That's seen maybe a little bump up here at some point this morning. I don't know if that's holding so far. There's also some talk about China, really kind of holding restrictions on where they're importing crude from. That could take some Iranian barrels that are not supposed to be on the market, take them really kind of off the market a bit. And you're seeing a premium right now to some of the Middle Eastern oil. That's pretty rare. I think that's because of that. So there's some interesting things going on internally within the market here that I think favor higher upside. And maybe if we see a little weaker dollar, I think we get some strength out of commodities here in the first part of the year too.
Yeah, real quick here, Bill, before I let you go, I wanted to get your take here on Bitcoin. It's given up some of those gains today, still above 100K. Bernstein came out with a note, said they see path to 200,000 in 2025. Seems like the bulls are still interested in Bitcoin at this point. How about you guys?
Yeah, in that commodity CTA that I talked about a moment ago, we do have some Bitcoin calls, 125,000 calls going out to this month, and we're exposure that we've been rolling out in months out there. I do think that it's been a very, very healthy consolidation here, right around 100,000. building out a nice floor. I think that's important. You got Bitcoin in the headlines. If there's anything that's going to be a buy the rumor, sell the news, as I'm not negative. I just talked about our long position in Bitcoin would be a potential maybe pull back at Bitcoin after the inauguration. That would be the really only thing on the inauguration I'd be seeing maybe as a buy the rumor, sell the news. Stay nimble on that. But overall, we remain optimistic. I think Bitcoin can and should continue higher. We have targets at that 125 and potentially higher here in the first half of the year.
All right, great discussion, Bill. Appreciate it. Have a great day.
Thank you.
All right, that's Bill Baruch, president at Blue Line Futures.